I'm just going to pick on someone because I'm in that kind of mode.
Please.
What's the matter? There's a guy today. I'm not even going to mention what firm because if you mention Mizuho, all the guy does is feel bad. It's Block, which used to be Square. Now it's Blockhead. This is a guy who wrote July 25th. I feel badly that I'm doing this.
Go ahead.
But I'll atone for it later on. He said that buying Square, which was then Square, not Block, was like buying J.P. Morgan in 1871. Okay? July 25th. Now suddenly he's like worried about buy now, pay later, where the delinquencies are on the rise. Now, I thought that when you did buy now, pay later, everybody pays later, right? Well, that turns out not to be the case. As a matter of fact, there are people who are serially missing their pay. They're making their buy, and the frequency of which they're missing is up gigantically. And
really?
Remember, Afterpay, Blockhead paid $29 billion for that one. Now, I happen to like Block, but not yet. Not yet. That's my for these higher multiple stocks. All I'm saying is not yet.
Right.
David, I mean, here's one because I know that you're an aficionado of the meme stocks. Like I was doing some work on Best Buy, which is a $24 billion company, versus GameStop because now you finally have an analog, right? GameStop's got in the mall. GameStop's up 626%. GameStop's worth $10 billion. So you have to wonder: is Best Buy worth 2.5 times GameStop, or is it worth 5 times GameStop? And
is GameStop only worth 1/20th of Best Buy? Now
you're going to join me and get. I'm trying to get all the people flushed out in my mentions column, saying everything I've ever done wrong right here. What they haven't attacked me for is when I gambled in 11th grade and they caught everybody but me.
Oh.
Yeah, we were all playing.
Not too late. There's no statute of limitations on that.
No, actually there is. That's why I mentioned it.
Okay.
But I do think, David, that we're at this moment where you have to take some pain. Now, you can say, I'm going to own Block through this, and that's fine, but you have to take pain. I mean, it is a little Mr. T-like.
Yeah.
Right?
Yeah.
The forecast
calls for pain.
But then,
by the way,
but then we'll come back. You're absolutely right. We'll come back to
Speaking of the forecast, I do want to get to James Gorman, somebody we've had on the show.
I like him.
Always like to
I like him. And he's James. He's not Jim.
Yesterday, Mr. Frost, that is Wilfred Frost, went and visited Mr. Gorman. Mr. Frost.
Oh, I thought you said Mr. Froth.
No, Wilfred Frost. Went and visited James Gorman at Morgan Stanley's headquarters. This is what Gorman had to say about the Fed and rates.
At the moment, at zero interest rates, we have no ammunition. We're 10 rate increases, 10 quarter-point rate increases from normal. So if I were the Fed, I would start moving earlier rather than later, store away some ammunition, and accept the reality. Now, this is before you even get to the inflation discussion. So we'll see. I guess the FOMC meeting is, I think, this Wednesday. We'll see where they come out. I would be very surprised if there aren't more dots talking about rate increases next year.
There you go.
Yeah.
I'm with James.
You are.
James is good. He's
Yes.
also a good manager. Stock's good, too. Stock goes to 95, buy more.
95. Where is
That's
it right
it's
now?
97.
Oh, I didn't
What is
realize.
that? That's not so bad.
Yeah. No, it's had a great year, Morgan Stanley.
Yeah.
He made the point as well that their strategy, obviously, they bought E-Trade.
I love what they bought.
Yeah.
They're also doing what
they
Silicon
spent.
Valley Bank shares
whether
doing.
it was an extra billion or so didn't matter, because think of all the market cap that they've actually added as a result
Right.
of those two deals.
Well, look, I'm not.
Eaton Vance
Remember,
and
I'm being very matter of fact because I don't want people to think I've morphed into a bear. I just like different stocks. There are so many companies that came public. 391 companies that came public, of which 100 have already been obliterated.
Yes. Yes.
And the public has been taken advantage of by the SPAC people and by the bankers. And the public just says, you know what? It's like dog food.
Okay.
We're not going to. You can
But
put
let's
new and
follow
improved on
through
the
on
side.
this.
The dog doesn't like it. Not going to eat
Let's
it.
follow through on the theme then. All right.
New and
If you're
improved.
backing away from high multiple revenue names.
High multiple revenues.
High multiple revenues, not to
earnings
and
are
you
okay.
think that, right, and you think it's going to be rotational, not necessarily people actually saying the Fed's coming, we're going to just take a breather here. What do you want to own?
Well, I want to own the drug stocks.
Which moved up yesterday quite nicely.
I have a company on tonight, David. You know them, Bausch & Lomb.
Yes, I do.
Now, Bausch & Lomb is dividing into 3 companies.
This is the old Valiant.
Well,
that's what it is.
Joe Poppich fixed. Yes, it's still Valiant. They actually have some bonds that are valued.
Joe Valiant.
But, it's split into 3 companies, and I happen to like the Bausch & Lomb business very well. But I have to like the dermatological business very well. So, I mean, this is, it's what I'm looking at. I think that stock shouldn't be at 23. It should be higher. Okay. I'm not making a stand on GameStop. I'm making a stand on Bausch & Lomb. Stock goes to 20.
Stand on GameStop to begin with.
I never did. I was at 400.
Well, you kind of did make a stand on AMC, which you and I have
No,
gone
I said
back
that
and forth on
AMC,
for a long time.
He's going to keep it going.
Very supportive of him.
He's been going to keep it going, but then he sold so much stock.
You've seen how that stock has finally started
he
to
sold
get
a lot of stock.
Yes,
We're talking,
what
of course,
was I
about Adam
saying
Aaron.
for a year?
David, you were right.